we want people to do this the right way because you are one deal away from financial freedom, but you're also one deal away from Chapter 11 bankruptcy.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time.
Welcome everyone to Alt Investment Made Easy. Today we're very excited to introduce to the world one of our law firm clients, Chad King of Titan Capital. The key takeaway from this episode is that Chad and his team have engaged in creating a long series of multifamily and other commercial real estate investment opportunities. Chad himself is an experienced business person and he has insights to offer in other areas as well. And we want to share with you how we all work together, and also Chad has a deal to introduce today. So we'll hear from Chad about his marketing efforts and in particular his multifamily live events and deal flow creator software. Roland, do you have more to add?
Yeah, for sure. Chad, welcome to Alt Investing Made Easy.
Yeah, thank you very much for having me. I'm looking forward to the conversation.
We're really excited to be here with you because we have a pretty long-term relationship. We first met through, I spoke at one of Joe Fairless's best ever events in Denver in 2018. And I think I connected first with Jason, but I met you shortly thereafter. Jason Urussi is also a client, great friend of the firm. I have huge respect for you guys. Just when you get to working with clients for a while, you learn which ones really are the hardworking ones, the ones that listen to their attorneys, and also the ones that operate with real integrity. And you tick all of those boxes. So I've really enjoyed working with you and just having you on as a guest for this podcast that Sarah and I put together. Like I said, when we were talking before we started recording, I mean, it's just a perfect example of what we're trying to achieve here, because you're one of our law firm clients, but we've gone to this extra step of registering an investment advisor so we can take advantage of this new broker-dealer exemption, creating this podcast as a platform where we are helping our law firm clients sell their 506c deals. And you have one that you're going to be telling us about here shortly.
Amazing.
In connection with all this, we give this disclaimer regularly on this podcast. Is Sarah and I are attorneys, but this podcast doesn't create an attorney-client relationship, and it doesn't create an investment advisor relationship. Those things would have to be created separately by specific agreement. So we can't come out and say, recommend invest with Chad, not because we don't believe in Chad. I believe in Chad. I believe in Chad and his team. He has great integrity. If you're looking for an alternative investment, I don't think that you could find a better opportunity, probably, honestly, but just in terms of making that recommendation, we would have to get to know you and make sure that as an investor, you've got all your bases covered and that this is appropriate with the overall asset allocation model that you've adopted. With that, I want to turn this over to Chad as quickly as possible. Chad, maybe tell us a little bit about yourself and your background.
Sure. I mean, I'll get into the relevant stuff, which is the real estate experience, because, I could go all the way back. I just grew up as a military kid, very humble beginnings, didn't come from generational wealth by any means. Got out of college with a couple degrees in finance and accounting. I like numbers. I ended up taking a sales job at Xerox, selling copiers door to door when I was 22, and I did that for a couple years. Was pretty good at it, but didn't want to climb the corporate ladder. Really wanted to and I've never had a salary. It was always commission only, and I still live, on a eat what you kill type basis. I like that because you can sort of write your own checks. The destiny is in your hands. So that's why I would gravitated towards being an entrepreneur, which is obviously not for everybody, but it was always calling me. And the real estate thing I just kept seeing it as a common theme amongst wealthy people. Like I just, all the wealthy people I studied, when I peeled back, the success that they had and where their wealth was, I kept seeing like, man, real estate is a common theme of all these wealthy people. So I got in. Unfortunately, I didn't really know what I was doing. I just kind of was one of those figured out scenarios. It was before I had children, so it was a little bit easier to take risks when you're young, which is another reason, Sarah, you mentioned before we started recording, the young now, those 20s is a great time to build that foundation of wealth for yourself, so that when you're in your 30s and 40s, now you can start to begin to reap the rewards of seasoned investments. But anyway, I got into real estate. I didn't really know what I was doing. I had to make some money, and I started flipping houses. And that was how I was creating active income. I partnered up with Bill Allen, who, Roland, you know Bill very well. He's another client of yours. He's a part of the story and part of the deal that we're going to present today. I've had a long relationship with Bill, but I ran into him when I was flipping houses down in Florida, and we ended up partnering up and scaled a wholesaling and house flipping business to do 365 deals in 3 years. So it was a year we did 183 transactions on the single family side, which is really cool. It sounds sexy, but it was a huge pain in the butt. It takes 14 employees and a bunch of other moving pieces to get that done. And single family is a great way to make fast money. But the problem that we had was, after you flip 160 houses in a year, there is no residual that comes from that. It's very transactional. It creates a massive tax problem, right? So the tax implications of that amount of active income with no residual and no tax benefits kind of created a big problem. And what we did was we pivoted over towards buying commercial real estate. So we would take the money from the active income that we were making from flipping houses, and we would transition it over to buy apartment complexes, which gave us all the benefits of the tax depreciation losses. Plus, it gave us the wealth creation for our net worth. It also had the preservation of wealth with our principal and capital and the equity of these things, plus not to mention the cash flow for coming from these assets, which creates streams of residual income that eventually will allow you to hopefully get out of the rat race if you can stack enough of them up. So that's what we did. And we started buying small apartment complexes, 14 units, 21 units, 27 units. And then we ultimately ran out of capital of our own cash to buy these things. And I didn't want to stop buying apartments because I enjoyed that space a lot more than a single family, in my opinion. I just enjoyed it more, the sellers, the logical nature of it, the numbers driven formulas, it's very logical. So we started doing syndications in order to continue to buy apartments. And our first syndication we did with Roland, I think it was $2.2 million. And heck, 6 months ago, we did a $32 million one. So, we've scaled up quite a bit. I think we hold about 1,800 doors right now. Done probably 14 syndications with you, Roland. I would say between 506Bs and 506Cs, we've done about 14, 25 commercial properties purchased, taken 13 properties full cycle. So we purchased them, repositioned them, stabilized them, and then exited and sold and returned an average of a 24% IRR to our investors across those projects. So we are, that's what we do now. And I'm pretty much full-time, just selecting deals, operating properties. We run, Jason, my business partner, Jason and I run all of the operations of these 2,000 units. If you count self-storage and mobile home parks, it's about 2,000 total rentals. So we run all those projects, and we've since vertically integrated with, a title company and an HVAC and plumbing company and things like that, other businesses. But that's where we're at. You guys have been an integral part of our journey, because I will tell you that the paperwork side of things is not my strong suit. I'm not very detail oriented. And without you guys protecting our backside, would never be where we wouldn't have scaled and been able to grow without partnership. Because I look at you guys as a partner. When I look at Roland, that's a business partner. He's not just an attorney. He's my partner on that side, and I lean on him heavily for guidance, questions, direction in this space. So it's been a cool journey, I think 6 years later, to see where we're at with you and all the stuff we've done. So it's awesome.
Yeah. So I'm going to let you take over next, but let me just say thank you, Chad, because that makes me feel so good. And when you've got somebody saying that about you, I admire you guys so highly. So we've got a great relationship. I'm very grateful.
Yeah, it's awesome.
Chad, I think You did. That was a great summary, by the way. And it's so many things we could ask you about. But why don't we focus on, telling us a bit about your people and the team that you work together with? Because I do think for people that are learning about this space, especially in the active promoter side where you sit, the team, just as you mentioned, Roland or Graham Martin being a partner of yours, there are other parts of your team. So I'd love to hear more about a few highlights about your experience with that.
Yeah, I'll be honest with you. You cannot do this alone. This takes a cavalry. If you're trying to be a one-man band, you're going to end up being your own bottleneck. You're only going to be able to do so much. You can't scale. You really can't scale like by yourself. It takes a village. It takes partners. I've learned that partnerships, honestly, have been the key to growth. And you can build your own team. I prefer, very lean and mean. So I have 5 people at Titan Capital Group on my team. We have a director of acquisitions. I have a vice president of operations. I have an asset management director. And then I have a couple of an office manager and an assistant, right? So we have a very lean team, and I prefer it that way, internal. But now you talk about partnerships. When I look at all of the partnerships I have, my partner Jason has 3,000 units, has his own team. Bill Allen has all this kind of stuff. He has a ton of stuff going on. His own company's running. He's an integral business partner of mine. I've done 25 transactions, and not a single transaction, actually I have one of them, but only one transaction of the 25 have I done by myself, meaning I'm the only general partner on the LLC. All right. So when I tell you, and a lot of them have different partners on them, Jason's on a lot of those. You'll see Bill's name on a lot of those, but there's different partners on some of them. And you have to build those relationships with people that, number one, share your core values, because I feel the only times I see that partnerships disintegrate or dismantle or have fallouts are usually when the core values don't align. Because if your core values align with your business partners, 99% of the issues you'll be able to solve because you share a lot of those same virtues. So that's number one, is when you're looking at partnerships, track record is really important. What have they done? What are their experience? Getting clear on expectations has been huge with partners, getting clear up front. I have a saying that good contracts make good friends. So put everything in writing, get very clear. And then the other piece of advice on partnerships is go deal by deal first before you start a business with somebody. The cool thing about commercial real estate is we create a separate LLC for every single asset that we purchased. So like I retain 100% ownership of Titan Capital Group. Jason has 100% ownership of Urusi Holdings, and we just partner on each specific deal. I've been in business with Jason for 6 years, and we still go individual deal. The issues that I see with people on partnerships is they find somebody that they meet at a seminar or something. They're like, oh, you're pretty cool. I'm pretty cool. Let's go 50-50 and we'll buy all these apartments. And they create an LLC that's 50-50 on an operating agreement, and they take that out to market. And then, 6 months later, that one guy's not working as hard as the other, and now they're in this weird thing. Whereas I always tell my people is go do a deal with somebody, do one deal with them, because that's a marriage itself. These things are 7-year holds, like you're getting married. So do one deal with somebody, figure out if you work well, if there's synergy there, if the core values do line up, and then do another deal with them if you like that. And then when you get 4, 5, 6 deals, now you can talk about having, a co-business together and things like that. But their partnerships are going to be integral to your growth. And I would say, find partners that really complement what you have, and they raise you up, and they also push you, and that they can, fill in your gaps and fill in your holes.
That's a great account.
But I'm very adamant about you need those to grow.
Yeah, it's Roland and I talk a lot about win-win, and I think when you come at any kind of relationship, like you say, it's a marriage. It's similar in lots of kinds of businesses, but if you try and seek the win-win and seek the not overlook things that are difficult, but actually find in a real way, that kind of attitude in someone else, then it's really critical for pushing forward what you want to do, isn't it? So
yeah, 100%.
Well, this business is so important. Marketing is such a big component to this, because you've got to go out and with each deal, tell the world about it, attract investors if you're doing a syndication. And one of the things I really enjoyed, I made a trip a couple summers ago up to Well, let me put a pin in that for just a second to let everybody know that, Sarah and I are in Austin, Texas, and we work for a Texas-based law firm, but Chad actually is in Murfreesboro, Tennessee, which is a suburb of Nashville. And so a couple summers ago, I went up to, it was Franklin, right, where you have the Multifamily Live event.
Yeah, Franklin,
another suburb of Nashville, and so this was a great event where Chad and his partners are trying to educate people who are interested in getting into this business, either as an investor or deal syndicator. Chad, maybe tell us a little bit about that, your other marketing efforts, and then we want to hear about this deal flow creator as well.
Sure. So we, Bill, Jason, and I were very adamant about one hand up, one hand down, and trying to help others to achieve financial freedom for themselves. Bill still runs the 7-figure mastermind where he teaches people, how to make money in single family real estate and then ultimately convert it to buy, commercial real estate with us. We did some events where, we would put, I don't know, I think that event had maybe 350 people in the room. We've had events, we do private events where we'll take 15 people, invite them to Murfreesboro and let them come walk. We have 1,000 doors within a 2-mile radius. So we'll let them, walk all those units and get them that level of, I'm a very hands-on person. So I believe, you have to be in it. You have to see it, feel it, touch it, at least for me, to understand it and learn it. I always tell people, you'll learn more from putting one property under contract and ended up in backing out. You'll learn more from that process than you would from watching 1,000 hours of YouTube videos on real estate. You know what I mean? And I'm not telling someone to go back out of a contract, but I'm just saying, you have to really learn it and feel it, touch it. So we do those events to help people realize that this is achievable, this is attainable, it's tangible, this is how it works. We bring people out, walk them through an unrenovated unit, take them to a renovated unit, tell them all the costs and everything associated with it, with all of it, and basically peel back the curtain on our operation. Because I want people to, as much as I'm passionate about building wealth and financial freedom, I know that there's an abundance out there of money. There's an abundance of wealth and prosperity, and anybody who's willing to put their head down and work and has a good heart and has integrity can achieve an endless amount of whatever they want, right? And we want people to do this the right way, because you are one deal away from financial freedom, but you're also one deal away from Chapter 11 bankruptcy. And it kind of sounds dramatic, but it's true. One good deal can set you free. Dead serious. I can provide examples of a really good deal struck at the right time in the right location with the right business plan at the right basis can set you financially free. But if your first deal is a bad deal, one bad deal can drive you to Chapter 11. And you have to be very particular about that first deal. I put 3 deals under contract and canceled them before I ended up buying my first apartment complex. And I had a mentor that I paid coaching. I paid $10,000 for 10 phone calls, 10 30-minute phone calls with this guy. And it was the best $10,000 I ever spent, because he helped me avoid multiple 6-figure potholes and potentially 7-figure potholes with just what he knew. He had 4,000 doors. So I was like, absolutely, I'm going to pay you for your time to tell me what I don't know, because he killed the first 3 deals I had under contract because I didn't know what I didn't know. So we put those events on to help people avoid potholes that we've stepped in, that we've seen and driven past, so that they can get off to a good start and buy properties in their backyard. We're just focused on Middle Tennessee, Murfreesboro, Chattanooga, outside of Nashville. So I love helping people that are, trying to buy properties in their own backyard, that really just need to understand how to underwrite them, how to raise money for them the right way, which we send everybody to Roland, right? But how to raise money for them, how to close them, and then how to run them, how to source them, how to underwrite them, how to do the due diligence the right way, and how to fund it, how to run it. And I want other people that, if you're listening to this, I can tell you with 100% of my heart that I just want you to have all the financial freedom that you want. But I've never seen a better path for it than commercial real estate, in my experience. I mean, you're not going to get rich on crypto or anything like that. That's maybe fast money, but it's fleeting. And if you want to build wealth for yourself and your family, commercial real estate's the way to go, and you got to do it the right way.
Well, there's a specific mathematical reason for that, and it's called leveraged returns. And you're doing that with a safe asset rather than speculating on crypto. You're borrowing money to buy assets, but you get appreciation on the entire amount, including the borrowed amount. So
100%.
you're exactly right with real estate. It's why doing a podcast about alternative assets, we can talk about crypto, we can talk about hedge funds, private equity, but really the heart of it is commercial real estate, private commercial real estate deals. And, there's really, honestly, there are metrics that show that there's no better risk adjusted returns than you can get through commercial real estate investing.
Yep. I couldn't agree more. And I have others, we have other assets, and I'm in the stock market. I got a Schwab account. I do like crypto for its decentralized, platform. Like it is a decentralized financial institution. I enjoy that piece of it because I don't like cash. I think cash that is just sitting is not effective. So I definitely understand that, but 90% of my wealth is in the commercial real estate space because it's real. I could see it, feel it, touch it. Everything you said about it. We do get leverage to purchase these assets, and then the tenants pay down the debt. And as they pay down the debt, our equity just increases. And then, we execute the business plan, and most of our holds are 5 to 7 years. And, the goal is to roll into better deals. And that's what we've been doing. We bought at a really good basis early on because it's what we could afford. And then now, as we've gotten a little bit more seasoned in our investment strategy, we've been more selective with our properties, our locations. We will talk about that deal that we have right now, but I can tell you guys how, why it's a great one, because we focus on our metrics really hard because it's the best.
Well, shall we get into it? We also wanted to talk about Deal Flow Creator,
Sure.
which is something that you've created, but we could do that separately. Why don't we hear about your deal?
Yeah. So the one we have working right now, and it's been tough to find deals. I mean, I'm sure if you're listening to this and you're looking and trying to source real estate opportunities, you're probably in the same boat as just like, man, nothing is penciling. Nothing's working right now.
Mm.
It's very tough. Now, we did have a little bit of relief with the Fed cuts at the end of last year. They just announced they're probably going to hold a little bit on cuts. But we're seeing that things are opening back up. I do think the election going the way that it did made people feel a little bit more at ease, at least with the next 4 to 5 years from an economic standpoint. And then, so basically what I'm saying is that it's difficult to find deals. We look at probably 300 opportunities before we strike on one. You have to look at a lot of deals. I mean, we made 75 offers before we locked this one up. We're making my team's spitting out almost an offer a day. And so when we select one, we really do vet the heck out of these things. The deal we have right now is in Chattanooga, Tennessee. It's 375 units. We're buying it for $25.5 million, and we're going to put roughly $3 million into it. It is in a great area in Chattanooga. There's 2 locations. One property is behind a Starbucks. The other one's next to a Chick-fil-A. It is the original owner. He built it with his father in the 70s, and then the other one was built in the 80s. So we are buying from what I would consider the mom and pop of mom and pops, which is reflected in the financials and everything else that we found at this project. The rents right now are about $600, and market rent on the units are about $1,150 to $1,200. So, they were telling us about their 3-year wait list that they have. And I'm like, I know why you have a 3-year wait list, is because you're half of what you should be charging. So the key here is the basis. So we're buying these things for $68,000 a door, which in our comps are around, $100,000 to $115,000 is what things are trading for. That's of the 80s vintage in Chattanooga. So we're getting a very good basis. This is a lift that is not for the faint of heart. Like if you don't know what you're doing, a big 375 unit syndication, we're going to raise probably $10 million for this project. That's our target. We'll go out to market very soon here for the raise. It'll be a 506C. Roland's going to probably draft the paperwork for us next week. It's a value, what I would consider a very heavy value add deal, which I'm cautious to do right now unless the basis is very good. I'm not buying anything on bridge debt. I don't want to float on my interest rate. We're going to go with a community bank. Likely, I don't have the term sheets yet. They're coming in on Monday, but we'll go with community bank debt. I'm thinking we're going to end up around 7.25% on the percentage interest rate with a couple years IO on a 5-year term. That'll line up with our business plan to get through all these turns, get these units renovated, get them up to market, and eventually achieve, a very good stabilized property by year 2.5. And then the last 2.5 years will stabilize with solid distributions on a quarterly basis until we can exit this project in year 4 or 5 for, a very conservative 110 a door basis, and get out of this thing with a solid, again, I like to underpromise and overdeliver, but a solid 16-17% IRR with my goal is to double your money in 5 years if you're looking at investing. So 20% average annual return is my target in 5 years. I've been fortunate enough to be successful to hit that. Obviously, past performance is not indicative of future results, and I'm not advising you either way. And I will tell you, we bought a lot of stuff in the late teens and was able to exit in 21, 22 when prices we exited half our portfolio during that peak because we were getting offered double what we paid. So I understand that was an anomaly and not the rule. However, we have very conservative underwriting on the back end for this project. And we definitely know that we are focused heavily on the basis of purchase, which is unheard of. Even our lender said, I don't know how you guys are buying this at 68 a door. And in a growing market in Chattanooga, right next to the airport, about 10 minutes from downtown. So that's our project. I'm happy to get into the weeds on any details. I don't want to go too deep on the business plan, but I'm happy to answer anything. We'll close, maybe March or April. We're working through a couple things right now, but it'll be a great opportunity for. I'm hoping, and I have it on very good authority that Trump's going to bring back 100% bonus depreciation. Obviously, we don't know, but we will do a cost segregation study. So those will be some great losses, some phantom income for 2025, and then we should be hitting quarterly distributions in 2026 after we get this project underway.
Maybe one specific that caught my attention, you said value add component. And of course, there's always the rehab of any dated units, but are there other big capital expenditures that you're going to undertake here?
Yeah, I'd say of the $3 million budget, we probably have about 750 that's going to go to the exteriors. The good news is the roofs are all in good shape. They've all been replaced. They were all replaced in 2016. So he bit that bullet and replaced those. So all of them are less than 10 years old. And we had a roof guy verify all this. And during due diligence, we walked every single unit. We walk all 375 doors. We got in all the crawl spaces, scoped all the lines. We bring out the cavalry during DD. So of the $3 million CapEx, maybe 30% of it is going to go to the exteriors. So this is a full rebrand. It's very difficult to maintain the name and the same look of a property while also trying to say, hey, this is a different project with different management and different ownership group. They're going to put money into this project, take care of it. I mean, the pool is down, like the basketball court's never been touched. There's weeds growing in on the grilling area. Like, we're going to clean this place up, probably put about $800,000 into just the exteriors, landscaping packages, making it look like a nicer place to live. And then the other $2 million will go into the actual interior renovation. So bringing those up to market, Formica countertops, nice new appliances, cabinet packages, LVP flooring, the whole gambit. I was actually very pleased with the interiors. Despite the rent level, it's not, they were not disheveled by any means. Actually, they were in very good shape. I was pleasantly surprised. So I'm hoping we'll actually have some of that budget that we can allocate over to some more exterior stuff. Yeah.
Yeah, well, that sounds great. And, one thing we wanted to remind, we had talked about this ahead of time, but if you have anything that you wanted to share, we have screen sharing capacity. So either, anything about that property or clips from the multifamily live event or the deal flow creator, just we can walk through there. There's a little share button. So if you're interested in that,
Sure.
That's something we could do for sure.
Yeah, I mean, the project, all that deck and stuff is going to come out. So probably when this airs, we'll actually be working on the PPM and subscription agreement, and we'll actually have the pitch deck finalized. So I wouldn't want to share something that's not, because I don't have the interest rate yet, and I don't like to share anything if my basis points are off. So once I get term sheets, I'll finalize my deck, and then that can go out to anybody who's interested. I'm sure there's a way you can reach out to Roland and Sarah and let them know that you're interested in looking at this.
We can, and if you're comfortable, obviously in the show notes for this, we can put contact details for you too, or whoever is your head of sales that you'd like to have as a contact.
Yeah, absolutely. I'll touch on the Deal Flow Creator software just because it's another project that we're working on. But what we're trying to do is what I have found through coaching, teaching, and helping other people to buy commercial real estate is the direct to seller method has been the most profitable for us. So going directly to sellers, and I buy about half my deals through brokers, and I buy about half of them directly with the sellers. And the reason I do that is because I found that we get the best deals going with the sellers. I like the communication of it, and we actually I prefer to. There's some really great brokers. Don't get me wrong. There's some phenomenal brokers. We work with them. But there are also some very bad brokers that end up screwing up deals because they add a layer of complexity to communication and they cannot effectively communicate through because there's a low barrier to entry in order to be a real estate broker. Okay, so if you're a real estate broker and listening to this, don't get butthurt. But there are unprofessional ones out there that screw up more deals than they put together, being honest. So I prefer to sit down with somebody who owns a mobile home park or a small apartment complex and figure out their issues, figure out their challenges, and then solve their problem, because it is a win-win. Like Sarah mentioned, you're not going to buy a real estate deal if somebody on the other side is losing, unless you're buying it like out of foreclosure at an auction, right? But it has to make sense for them. Most of the people in this space are very logical decision makers. So it's a numbers decision. Does this fiscally make sense for me to sell this at this point in my life? And for a lot of baby boomer property owners that are 65 and over and wanting to retire and their kids don't want to inherit it, this software is geared towards you getting in front of sellers to be able to market to those properties. And what I found was when I tell people go direct to seller, they're like, okay, that's great. They just don't know what to do after that. So what this is it's a done for you system where, and you can come in here and select which counties you're interested in us doing the marketing for you. And we'll set up all of our templates, all of our text messages, all of our ringless voicemails, our letter campaigns, everything that we do in order to purchase. I don't know, we purchased probably 50 or 60 million directly from sellers in the last 5 years. So everything that we've used to get sellers' attention, we'll do it for you in your own backyard. And now, obviously, like the red is exclusive, and this is an exclusive software. So if we're marketing for you, we don't do it for anybody else in your county. And like obviously Tennessee, where my home is, I have a lot of friends here so those counties are already reserved. But if there's a lot of areas in Texas where you come in here and you can see, if you select these counties, right, you can see the population, you can see 2010 to 2020 population growth. So if it's a county that is if it's a county that's growing in population, looks like I'm selecting some very barren properties with not a lot of commercial real estate, but you can see if it's growing, if people are leaving, if they're coming, things like that. Because the other thing that is very important when you're selecting a place to invest, that's the number one thing is, where do I invest? Somebody's in New York, they're like, I don't want to buy commercial real estate in New York. Where do I want to invest? Mm-hmm. But you have to look at a lot of demographic information, including median household income, median home price, population growth. Is it growing? Is it retreating? Are people going there? Are they leaving? Things like that. And so you're able to look at these counties, and then we will do the marketing for you. And then once the sellers respond, now it becomes your time to engage with the sellers that are responding to the messages that we have proven tried and true work. Because most people, and they also don't want to pay all the money for all the softwares, because CodeStar is $2,000 a month. Skip tracing softwares are $1,000 a month. Like, you get a CRM is another few hundred. If you want to get Reonomy, it's $399 a month. And people look at that, they get overwhelmed about all these softwares that they need to even find sellers' information. And they're like, well, and even to even do this, I'd have to pay $5,000 in software costs. Well, go select your counties. It's based on the amount of properties you want to market to. And for, a couple grand a month, we'll do all that stuff for you. So it's a way we can help people find deals in their backyard directly to sellers, is really the basis of that software.
That's super cool.
That is cool.
I'm really impressed.
Yeah.
That is cool. And I imagine sellers also appreciate that, because if you, especially in the case like you have of somebody who built the property and managed it with their family for a bunch of years, you have an emotional stake in it too. It may be a logical game when you decide to sell, but ultimately, you've got it's been your life's work, right?
Yeah.
So
100%.
I can see how that would be really appealing too, to be to have sellers who want to meet somebody who came directly and who and wants to kind of continue the legacy in a certain way. of a
Well, and a lot of
property.
them don't want the, I don't know a better analogy, but they don't want the dog and pony show of, listing with a broker. They have all
Mhm.
these people touring, driving through, taking pictures, interrupting their tenants' lives. And like, you know, uh, the, and brokers, sometimes they'll promise the sun, the star, and the moons from a price
Mhm.
perspective, like, hey, we could sell this at a 5 cap, and now they anchor this seller really high on this crazy valuation that's not realistic, and then market sort of retests them, and now they've basically, the brokers told them it's worth $1 million. I think it's worth 700, and it's a really hard battle to fight once there's an involvement of somebody who's not a sophisticated guider of the project, who's just chasing a commission, versus, like you said, you go in, you sit down with this person, and they want to do a deal with somebody that they know, like, and trust. That's who people want to do business with. They want to do
Yeah,
business
it's true.
with people they know, like, and trust, who have a face, a name, a track record of performance. They're going to do what they say they're going to do. When they sign a contract that means something and they shake their hand, like, that's who we are. We were built on stewardship, and we were founded on stewardship, built on integrity, and measured on our results. And that's why I like to go to the sellers, because I can tell them my story, and a lot of times be a good avenue for them to sell.
Well, that's what we're trying to do here on this webcast also, is give people a chance to share kind of who they are, so that they become more known to anybody that might be watching. If they're people promoting deals, investors can see, oh, listen to that guy. Wow, I really could relate to what he was saying, and so, in the end,
90% of your investment goes into the operator, not the deal. So when you're considering making an investment in a real estate project, the person who is making the decisions at the helm of that ship is who you're putting 80% of your money with, is going into that person. So I don't care how anybody can make a deal look sexy on a PowerPoint. Anybody can throw a return metric in there and promise the moon, but it's like you are investing in the person that is making the decisions. And that is the first thing I look at when a pitch deck hits because I'm an LP too. I'm a passive investor in every one of our projects, and I invest in other people's projects as a limited partner. So my first evaluation is who's running the deal, what are their track records, how many have they entered, how many have they exited, like what is their track record, have they ever done a capital call, like what is their story? Because the deal metrics will come later. I have to be invested in that person first and believe that they're going to run a successful project.
Well, that's a truism. A good manager can make a bad deal good, and a bad manager can make a great deal horrible. So see that over and over again. And that's why, I don't know. I haven't seen specifics about your Chattanooga deal, but I know it's going to be great, because I know Chad King and his team are quality, integrity. I love the words that you use. You listen to the language that people use specifically, but there were 2 words that you used that I really liked a lot. Abundance was one, and then stewardship. And Sarah and I had talked. We had a kind of a 2024 reach out episode that we filmed yesterday, but really talking about that there has to be something more to wealth creation than just the financial aspects of it. We got into this discussion about different types of capital, and I think that's what I hear from you so much, Chad, and the people that surround you as well. Like attracts like. So just I really it's what makes me feel so good about representing you guys.
Yeah. Well, you talked about stewardship. Like, I have a thing that I say is you take care of the tenants take care of the properties take care of the investors, and the investors take care of us. Like it's like, it's a trickle down effect. And I've seen that people who run projects where they're trying to squeeze every penny out of it, and they're not, reinvesting back into the project, or they're not taking care of their tenants, and they're not hitting work orders in a timely fashion. Like, we focus heavily on operations because we want to make it a better place to live. Because if we make it a better place to live and the tenants see that, number one, they're not going to balk at us being a market rate property. They're going to see that we attend to the work orders in a timely fashion when they have them. And so many projects I see have deferred maintenance. They're in disheveled states. They have a backlog of work orders, and it's 9 times out of 10 is the ownership group is, number one, not paying attention, not experienced, or they're really just trying to suck the property dry. And when that happens, it's a trickle down effect. And for us, especially because we take on investors, my fiduciary is obviously to the investors, to that LLC. 100%. Every decision I make is in the best interest of the investors. My capital and my hard-earned cash is sitting right next to yours as an investor. And, we take care of these properties. If you drive through any one of our projects in Murfreesboro, like the trash is picked up, they're well-kept properties, because if you take care of them, the tenants will take care of them. And then the tenants take care of the project, and the project takes care of the investors. And, right now we're 95% occupied across the board in Murfreesboro on, 1,200 doors, which is really strong. And we're not giving concessions. We're at market rates. And I have to attribute it to the fact that, the intangibles are being met and taken care of, which is people feel safe at our projects. They want to live there. They are renewing their leases, things like that. And, you talk about stewardship, like it goes up and down. You got to be a good steward of yourself, of your projects, of your investors. And the people that I see that don't make it in this industry are the ones that they cut corners. They don't do what they say they're going to do. And eventually you'll get away with it for a little bit, but eventually, that chicken's coming home to roost. And, I have a saying that it's takeoffs are optional, but landings are mandatory. And like, if you buy a deal, like you're going to have to get out of it at some point. And if you don't do your business plan or do it effectively, like that is eventually going to come back. So just do what you say you're going to do. That's the number one thing that people want. And if bad news does not get better with time. So everything we touch doesn't turn to gold. Of the 25 deals, there's probably a couple that I wouldn't buy again. I'll be honest with you. Like there's a couple that I probably wouldn't buy again. And if you have news that, is adversely going to maybe have an adverse effect on returns or distributions or something, like get out ahead of it, be honest, be upfront, be transparent, tell people what's going on. And 9 times out of 10, like people are going to understand. They're not, it's not going to be as bad as you think, as long as you are ethical and are telling the truth, that kind of stuff. So,
well, there's a principle there. I've always, there's a saying that if you have bad news to tell, there's no better person than you to tell that about yourself, because you can not only characterize, contextualize it, but then tell people, how are we going to fix it? How are we going to overcome this challenge? And so don't be afraid. I mean, as an attorney, we talk about your disclosure obligation. Yeah, you have to disclose all the material factors of the investment. Fail to disclose anything that where the failure to disclose is material, but don't be afraid, because that disclosure is what protects you. People get the angriest when they feel like the manager is hiding the ball.
Yep.
Yeah.
Couldn't agree more.
Well, listen, are there any other topics we want to touch on? We've been going for about 40 minutes, so we could happily continue on, or we could leave it at that. One thing I just wanted to say, or just a question actually, which is just here for maybe the end, is, you sound like a very busy person. I know you have a family also. And I just wonder, one thing that's interesting for us to learn about from some of our clients who we've interviewed is like what they do personally to manage all of that. Sometimes it's a specific practice, or could be, even have a religious aspect to it. But is there anything in particular you'd like to reveal about how you manage your own self and life?
That's a great question. Everybody has challenges, right? Personally, we have a lot of employees in our HVAC and plumbing company and our other businesses. I told you my team's lean and mean, but you talk about our projects all employ people. Our HVAC company, we probably have, 40 employees that are residual of all of our projects and properties and things like that. And everybody has things going on. Everybody handles stress differently. Everybody's motivated by different things. I'm kind of money motivated. And that's okay if you are too. It's great. You should be. We live on an economic planet, so you should be money motivated. But some people aren't. Some people are purpose driven. Some people are, work-life balance driven, where they just want to be able to clock in and clock out at 5 and go home. For me personally, I work with my wife. She's my director of acquisitions, stone cold killer on sales, badass human. And we talk about this thing called work-life harmony, where we're trying to create a life which we don't need a vacation from. And it all is like one fun, encompassing thing. And I have a 3-year-old and a 2-year-old. So it's hectic here at this house. I'm actually in my little bunker. You can probably see my concrete walls because it's a snow day here in Tennessee, and the kids are out of school. So I have to come into the bunker to get any peace and quiet because it's chaos all the time. Good chaos though. And I'll tell you that I said work-life harmony versus balance, because when you say work-life balance, it insinuates that you have to give something up to have something else. So in order to have a successful career, you can't have a successful marriage. And I don't like that balance thing, because people end up getting so stressed out about what bucket they're filling in, when rather you just create a life that is just one beautiful thing. And we struggle with this. Like, this is not, don't have this figured out. You just asked me what we're doing. Like, this is what we do.
Yeah, I love it. It's a great word to choose, harmony, because you're right.
We try and weave it into, we're entrepreneurs. Like, we're always on 24/7. It doesn't end. Last night at 9:00, we had an issue with something, and my wife and I are working through it in bed. Like, we're just working. And, that's what I would focus on is how do you create a life that's by design? So one that you've created for yourself, not that somebody else has told you. And that's what you should be working towards. Whether you're in a W-2 job, I don't recommend leaving your W-2 job to get into real estate investing full time. Like, it's not something that I'm like, jump ship and come be a real estate investor. Like, you should be focused on earning more income, creating passive streams the right way, being smart about it. Now is not the time to go crazy and leave, a very good career unless you're just completely unhappy, right? Now is the time to find out ways to make other money, maybe in your job. Maybe you're an entrepreneur where you can earn more, in your current role, and then start passively investing, or, so things like that. But I would say that you want to look at the life that you want and start working towards creating that by design, because that's where we're going, is just one that we kind of create like a harmony. But if you're asking for my escape, I like to play golf. If you want to know when I'm completely relaxed, it's on the golf course by myself.
But it's beautiful golf out there in Central Tennessee.
Yeah, there's some beautiful courses out here. So I love hanging out with my kids and my wife and everything. But you have to have that escape. You have to be able to recharge. And you have to be able to work on your business, not in your business, especially those entrepreneurs out there. Like, we get so caught up in the business that sometimes we forget to elevate out and work on our business. And what do we, high level, where do we want to be? And where do we want to be in 20 years? So then work that back. All right, well, where do I want to be at 10? Where do I want to be in 5? Where do I want to be in 1? And then you can create a business plan to get there. But you gotta have those escapes too.
Well, that meta thinking, that's what I love that. It's the stepping back and being objective and observing what's going on, rather than being not a victim, but I love that philosophy, Chad.
Yeah, it's reactive. We have a lot of people that live in a reactive state.
Yeah.
Right. Yeah. They're reactive. And that's, I need people to get more proactive with taking responsibility for where they are based on, and then looking at where they want to go. I had a mentor of mine early on. She made me write my own eulogy. And it was like a really kind of a weird exercise, but like when I was done, it was like, when you write your eulogy and you imagine your kid reading it at the podium, what do you want to accomplish? What do you want to be remembered for? What have you done? What did you do in your life? And then when you write that, it's like, well, heck, if I want that to be true, like, what do I need to start doing in order for that to be true? And more importantly, what do I need to stop doing? What is in my life that's pulling me away from that? And 9 times out of 10, people are not caught up they're caught up doing things that they should stop doing. It's, we can get into this, but this is just personal growth. Is just so many people are worried about the opinions of people they would never trade places with. They're caught up being friends with people just because they were friends, but those friends have no bearing interest or are helping them to push themselves forward in life. And, they just need to shore up those circles, put their force field up, and focus on the mental energy that you have, because it's limited. And often we give it to people that don't deserve it, that we don't really want it. And we also take advice from people that we wouldn't trade places with. And you got to stop doing that right now.
Yeah. Well,
That's
listen,
great.
Chad, no, that's great. I was wondering, for future, maybe if you'd be interested in talking some more, probably not this year, but one thing I'd love to do in the future is do a series of chats specifically oriented towards university kids and maybe even younger, about how
Yes.
you know what you really need to be prepared for once you leave university. And I believe that all of this is really the best advice that you can have. It's nice to think about, oh, what career you want? What do you feel like? What's going to make you happy? All of that's nice. But there's some practical realities that are going to make you feel even happier, even if you have to go transition into, a different way of doing things than what you did when you were in your school life, right?
Sure.
So
Yeah,
if you'd be interested, I'd love to. It sounds like you'd be like a perfect figurehead for something like that. Kids, I'm sure, could relate to you so well.
Yeah, we have there's actually a business idea that Jason and I are in workshop. It's not anything that's come into fruition, but it's called Freedom University. And it's actually a curriculum for teenagers and young adults, because I don't believe that universities prepare people very well for the real world.
Totally agree.
They don't teach people how to do their taxes. They don't teach people like how to invest, the difference between good assets and liabilities, good debt, bad debt. Like, what is debt? How do you use debt to get wealth? Like, there's none of that. I mean, I got degrees in finance and accounting because I loved, I wanted to figure out how money worked, but all it did was teach me how to be a bookkeeper for somebody else. It didn't teach me how to create financial freedom for myself. Yeah. And that was like kind of the biggest qualm that I have with universities is they're not geared towards teaching you the necessary skills to build wealth for yourself. And I would love to do that, Sarah, because
cool.
It's on my heart to
Let's
help.
just stay in touch. Yeah. Or if you end up developing anything, we can support you in any way. I would love to find a way to support you on that.
Yeah. Happy to do those series too.
Oh, cool.
Well, Chad, it's something of a segue. We can leave this in or take it out, but I've got a new connection to Tennessee. I don't think I've told you. Sarah knows about this, but my daughter Ella, who is 17, is going to be Tennessee's goalkeeper beginning fall of 2026. That's Knoxville.
That's awesome.
A little ways away from where you're at, but maybe it's going to. I'm for sure going to be visiting Knoxville, and I can just make that swing over to Murfreesboro and hang out with you guys a little bit.
Yeah,
100%. That's
and this
really
girl,
cool.
she's fierce. She's like she's been scouted since she was like 14.
Oh yeah,
she's like 6'2", and she basically, she takes care of her goal.
Goalkeepers are no BS. Goalkeepers they got to be savage out there.
Yeah. She's the sweetest smiled girl, and that she's been scouted nationally since she was 14. So.
That's awesome. Well, I'm looking forward to seeing her on the pitch.
Yeah,
for sure. Well, thanks.
So.
Well, that seems like a good trigger to close the episode. Why don't we wind up here, and then we'll look forward to some future conversations. And please keep Sarah and I in mind for your what was the term? University project?
Freedom University.
Yep. Freedom University. I really like that a lot, and I think that Sarah and I both resonate with
completely.
That for our kids.
I'm super fiercely passionate about this.
Yeah,
kids as young as they can, they can understand money from the time they're really little. They naturally understand the concept of exchange, right? Really? My kids constantly bargaining with me, right? So
they're little negotiators.
God. So it's just a matter of teaching in a healthy way how that translates into your practical life, I think. So
yeah, absolutely. Well, I'll keep you posted on that project.
Thank you.
Yeah.
Well, it's so lovely to meet you, Chad. Thank you so much for joining us. And to everyone, thank you for joining us today at Alt Investing Made Easy. If you liked this episode, please like and subscribe to our channel.
And remember, everyone, take aim with your alternative investing strategy.
See you next time.